Yeah. Friday wrap up. It is Friday, March 9th. We're bringing in a new expert here, David Warren, DW.
Oof, I didn't tag anybody. Do I need to tag you guys?
Nah, it's all good. Don't worry about it. So we are, Matt's got his laptop off, so we don't actually have our producer here today. So if you have questions, just fire them onto our newsfeed and we'll pick them up on the laptop here. But today we wanted to talk about two of the most important things, two of the things that we get asked most often. One is, what the hell do you guys do? What is a mortgage broker? What is a mortgage agent? And secondly, first-time home buyers. That's obviously the hot topic right now. We're coming into the spring season. There's a lot of homes coming on the market. I'm sure everyone's seen the new signs. And we get asked, as I said, like, what do you guys do and how are you going to help me get your home? So, Vito, we got Dave here. We got the whole referral squad. We're live at the Referral Mortgages office. And let's get started. So, Dave, why don't you tell us, what does a mortgage broker do? Who are we? What are we?
Effectively, a mortgage broker works much like an insurance broker. We work with a multitude of different banks, from the major banks like TD, Scotiabank, Laurentian, etc., as well as credit unions, mortgage-focused banks, where their sole focus is mortgages. They don't sell any other ancillary products. But we have access to all these different banks, as well as alternative lenders, so even for people with bruised credit, etc. And we work with all of those lenders, and we take in an application from you, and
keep going.
I work with all those banks, submit your application to all of those banks to find the best product and rate that works for you based on your situation currently, as well as what your plans are moving forward in the future. So we look to find out how long you maybe want to stay in the property, if you're maybe looking at down the road buying a rental property or converting that property to a rental down the road, find out all the different information about what you're looking to do, and then that way we can best position it with the different banks. We work on behalf of you, we negotiate rates for you automatically, and banks offer us the best rates because they know we can deal with up to 40 lenders. So we get typically better rates than you'd even get in your branch if you were just walking into a TD, for instance.
But Dave, I bank at TD. I want, I have my checking account there. I got my credit card there. Shouldn't I just go to the bank and book an appointment and get my pre-approval? Isn't that how it's supposed to happen?
Well, I think a former banker, Paul, would be able to elaborate on the process
Paul,
of walking into your bank. And
so here's the question. What's the difference between going to your bank and dealing with us mortgage agents? What is the difference? And how can that benefit a first-time home buyer?
So one of the biggest misconceptions I think that people have in dealing with a broker is that they think that it's a paid service, that they have to actually pay us for that advice. So when you go into the bank, a lot of the times, all the times, the banks are obviously publicly traded. They're all publicly traded, so they are looking out for their shareholders first, but their clients are really what drives their business. So to me, I think coming from that environment, it's a bit of a skewed model in the sense that it's really hard to look out for your client's best interest when you're looking out for your shareholders' best interest at the same time. And so for us, on our side, even though we're working with banks, we always have our client's best interest in mind, and we have 40 banks that we can really kind of put them into that specific, channel that they're supposed to be. And when you go into the bank, obviously they're looking for those government full-time salaried employees, whereas for us, we have lenders that want that, but they also want the self-employed individuals, the people with bruised credit, the people that the banks just don't want because they're looking out for their shareholders. They want that safe deal. They want that security. Yeah. They want conservative.
What I would touch on, the bank, you're limited to their products, right? So you go into your Scotia, your TD, your RBC, you're limited to the products they have. You're limited to the employees they have, and you're limited to the bank hours they're offering you. So again, the key word is you're limited, whereas with us agents, we have access to many of these same lenders. Some of the top 5 banks we don't have access to, and then the rest we do. And we don't provide these limits. If one bank's policies are not working for a client, then we're going to move on to the next. We're not going to waste time with that bank because that bank has too hard of a policy for a self-employed individual, for a new to Canada individual. So, so that's where we truly differentiate, right?
Yeah, and at that, maybe you could explain, you coming from the banking world as well, you could explain how it works with rates, with the bank, how negotiating with the bank, they're not, whether you've been a client of theirs for 20 years, you think you're going to walk in and get their absolute best rate, but that's not necessarily the case, and how that process works with the banker.
Yeah, when you're coming into the bank, mean, in any sales job, it's going to be a back and forth negotiation, and it's constantly, I want the best deal, I want the best rate. Ultimately at the bank, they have 3 tiers of rates. The bank employee that you're sitting in front of, they have the 3 tiers. They have their ceiling rate that, they'll get the most benefits from work if they give you that rate. They got their target rate, which is the rate ultimately that branch wants to give you, and then they got their floor rate, which is their ammunition. It's if they're win their business rate, So you have these 3 tiers where, depending on the knowledge level of the client, that's the variance that the employee has to work with. So if the client or the customer is knowledgeable and has done their research on rates, what's being offered, it's going to be a game, and it's going to be a game to, how low does the employee have to go? Do they have to go all the way to the floor, or can they get as close to their target as possible? And that's the mentality of the banker. That's the mentality of every single bank appointment that you make with your banker. It's where is that rate going to fall? And ultimately, they want to get you that target rate, because that is the most beneficial to the shareholder. And for us, these lenders that we showed you, they're going to send us an email every day. These are our current rates. These are our current rates. 5-year fixed, variable. And so we don't have this target, this ceiling. It's
programs, not just rates, there's specialty programs, like you said, that the banks just don't offer that we have access to.
Or their advisors don't know about.
Or don't know.
Because they don't focus on mortgages, they don't eat, breathe, they're focused on mutual funds and RSPs and opening a checking account and a Visa. They don't know mortgages.
That's one of the big,
and they're part-time. They're not, you might meet with them today, they're away sick tomorrow, they're not back until Wednesday or Thursday, and you've got a waive conditions on the Friday. Your hands are tied.
It doesn't work. That's the thing. The hours that employee has available to you are limited, because they have other duties to do at work. They got to go help the front line, cash some checks if the line is too big. They got to help open the branch, close the branch. They got to take their lunch breaks, right? They're limited to just focusing on your file that's on your desk, And if another appointment gets booked, then that means your file is getting passed on to the side, and hopefully they remember to get back to it. And that's ultimately the differentiator, because we're here all day, every day. We're working on the number one, and that's you.
Yeah.
So long story short, summary, we work on your behalf. We farm out, we get information rates from all these 40 lenders. We're not stuck. You're not having to go in and out of one bank to the other to try and negotiate. We do that for you. There's no cost to you as the client. The banks compensate us and uniformly across the board. So there's no preferential, preference over one bank over the other. We look out for what's best for you, the client, and we work all hours a day, anytime, and with any situation. So that's kind of a summary on that. We'll move on, just given time. But I think like Vito here is going to.
Move on to just the. So now, how can we help you with the first-time home buyer process? With first-time home buyers,
So pre-approvals is the main thing, right? With there's a hot market right now. There's obviously a lot of changes to the market, both the mortgage market, but also the Ottawa market itself has shifted a lot since the rules changed. So right now, one of the main things is obviously pre-approvals, right? And getting pre-approved, that's the first step in the process, is to know exactly what your buying power is. So when you're actually going out with a realtor to look at homes, you're not looking at something that's $450,000 when really, from a budget standpoint, you should be in the $325 range. So what we do is we kind of take in your information, we analyze your full financial picture, and then we arm you with a pre-approval so you can actually go out with a tangible piece of paper that says, hey, Mr. Realtor, I'm pre-approved for X dollar amount, let's get shopping. And it empowers you, and it lets you know, right? It puts you in a better position.
And it's so important now more than ever, because we have a new spring season on the rise here, and what you could have afforded 1 year ago is very different today. So this year the rules have changed, the game has changed, and so it's all that much more important to get that pre-approval, because we're feeling it. The market seems to be hot. The homes are moving, people are getting excited, people are going to open homes, and there's multi-offer situations.
Canada,
we'll
if you're shopping in Canada, Barrhaven, any of those areas in particular, it's extremely competitive markets. It's essential to be pre-approved. Realtors, you can talk to any realtor that you may know, or it's too bad Greg's not here, but that there's 6 cars lined up with realtors to go in and see that same home. I've had realtors send me videos of 6 cars, people in and out of one property. Client that lost out in 1 week on 2 properties because there were 6 and 8 offers at the same time on those properties. So it's crucial to speak to a mortgage agent, get pre-approved ahead of time, know that you're not wasting your time either looking at properties that is out of your budget, and then that way you can go in and offer confidently.
You could restrict your conditions, so instead of in a traditional manner where if you have no pre-approval, no pre-financing set up, you're going to have to set a week for financing conditions, because you're going to have to go to your bank, you're going to have to discuss your options with your banker or your mortgage agent, obviously. And if you didn't start that process yet, you need a good 7 days on those conditions. But in a multi-offer scenario, you need to limit that condition. You need to say, I'm going to put a 2-day financing condition, 3-day financing condition, because there's going to be 5 other offers on that same property. So you need to be a step ahead, and that's why you need that pre-approval. And moving on from that too, from the pre-approval, I was talking to some first-time homebuyers last night. They're 5 years new to Canada, and we were talking about their down payment. They said, we have $50,000, Matt, we're ready to go. And I'm like, perfect, okay? So what about your closing costs? They go, what's that? I go, closing costs are your legal fees, your
land transfer
tax, okay, and it's your basically it's the cost of closing out your purchase. It's not good enough to just give your down payment to the bank. The bank gives you your mortgage, you buy the house, that's it. There's other costs associated. You're gonna have to get a home inspection, you're gonna have to get an appraisal, you're gonna have to pay some land transfer taxes, which is just a tax on buying your home essentially for a first-time home buyer. And then you're going to have your legal costs. So the bank estimates that to be 1.5% of the purchase price. Okay, so that could add an extra $5,000 to $8,000 sometimes that you need to factor into your down payment.
And it's important that the banks actually, so really your down payment when the bank looks at it needs to be 6.5%. So it's no longer like, I have my 5%, I'm ready to go. They use an estimate of 1.5%, but they want to see basically 6.5% for your down payment. So it's not that 5. Yeah. 5 is the number everyone thinks, but you really need 6.5.
Exactly. So then when I tell my client last night, I'm like, so is our number still 50, or is our down payment now 45,000, and we need that extra 5,000 for our closing costs? And they said, okay, yeah, we need it's a $45,000 down payment then, because we didn't factor in closing costs. So it's definitely very important to understand that, because we don't want you to be, strapped 1 week before closing, and your lawyer sends you the bill, and you're like, what the hell is this? It's very important to factor in, and you won't know that until you get your pre-approval.
So speaking of closing costs, what is the full buying process? So I'm a client, I come to you guys, I say, hey, here's my application. Me and my wife or whoever want to buy a home. What's the process? When do I talk to my realtor? Kind of walk me through the buying process.
Yeah, I mean, you're obviously, as you said, you're going to get pre-approved, know what you're able to buy. Your realtor, you'll start working with a realtor. They'll get to know you, get to know where you're looking, where you're working. Find out what areas you want to be in. Set you up likely on a search, so you'll start receiving properties on a daily basis as new listings hit the market, as price changes. So you can get a feel for the market, get a feel for what prices are out there, and then as that goes, your realtor might help you narrow that search down and redefine it. And once you start to see some that you like, set up some showings. So go out, look at the properties, maybe go to some open houses on a Sunday, what have you. And once you find that property you like, your realtor will work with you on negotiating a purchase, submitting an offer. The offers, typically it can be accepted right away, or there can be a negotiating process with that. And negotiating can be from price to deposit size, to the closing date, purchase price, any of that, and even conditions within it. Conditions are what, you'll have a period or items within that purchase agreement that you'll have 5 or 10 days to make sure you can get insurance on the property, make sure you can get a mortgage, make sure that your lawyer can do a title search or a condo search on the registration. As you work through those conditions and you work with us on getting that approval, you then would waive your conditions on that purchase.
And then the offer is firm. then you're going to be a home buyer, a homeowner.
Well, you're at least contracted. You're
legally
obligated to become a homeowner. At least. Yeah.
One thing to keep in mind, though, that we didn't touch on is as you submit your offer, you will have to put a deposit down. So the deposit does range.
Yeah.
Typically, it's in the ballpark of 1% of the purchase price is usually what realtors use. So keeping that in mind, that is something that you need to have available. You might, plan to save the rest of your down payment from, over that 3 or 4 month period, the remainder of your down payment. But on acceptance of that offer, you need to have that deposit.
And that deposit goes directly towards your down payment. So if your down payment, like Matt said, is $45,000, and you gave a deposit of, let's say, $4,000, then now your down payment's only $41,000. So it all calculates in when we're running those numbers.
It's important to keep that in mind up front.
Yeah. So how is the market here in Ottawa? What's going on now?
Well, market's heating up. I mean, open houses are full. Offers are flying off the table. Realtors would tell you they're busy right now, and we're not even May, so there's still snow on the ground, and yeah, again, we're not even May, so it seems like we've heard a lot of negative press about mortgage changes, mortgage rules. It's so hard, these big bad banks. But in reality, the cost and process of buying a home is changing, and we got to adapt. And at the end of the day, people still want to buy homes. It's still an asset. It's still beneficial to your financial portfolio to buy a home. So we just got to adapt to the changes, and it's not slowing us down in Ottawa, that's for sure.
So what would you say to people that want to basically save up more? You hear some people like, oh well, I don't like debt. I'm saving up a 20% down payment so I can avoid CMHC or insurance premiums.
Or I have some student debt.
So
I can't wait. I gotta wait.
So explain some of the advantages of buying now with 5%. A lot of people want to wait till they have $100,000 as a down payment, which to just explain the advantages of buying now instead of waiting to earn that down payment or to save that down payment.
Well, buying now, what's the alternative? I mean, is that client living at home rent free with their parents? It's obviously different scenarios, but if you're paying rent $1,500, in your mind you're thinking I need to save up a 20% down payment. Well, you're kind of spinning your wheels here, because all that that cost of the CMHC, which we didn't really touch on, but the reason why people want to put 20% down is to avoid the CMHC fee, but they're not realizing that they're paying this $1,500 a month rent. So if you have your 5% down, or your 6.5%, as we said, then it allows you to get into your home and take on a $1,500 mortgage payment, where half of that mortgage payment is going towards the principal, which means going towards your mortgage pay down. So in year one, you start with a $300,000 mortgage. At the end of that year, your balance is going to be around $293-ish. Okay, so you pay down $7,000 worth of that loan, which is in your name. Now you have $7,000 more worth in your property. Whereas if you waited an extra year, 2 years, you kept paying rent, that rent is going to your landlord, okay? And at the end of the day, the cost that you're saving on the CMHC is now...
Well, you've paid 7, and the home might have gone up 7, right?
That's what I was going to touch on. I mean, people say they want to, wait, save up that 20%. They're going to spend a couple of years, but over that 2-year period, home prices have jumped in areas in Ottawa 8%, 10% annually. So over that period of time that you're saving for that 20% on that $250,000
earning 1% interest.
Well, it's not $250,000 anymore, because it's now, that home is now $270,000.
Yeah.
It's gone up $20,000 in that period of time, and now you're almost chasing it constantly, and you've missed out on that equity you could have.
And even with that, like that being said, look at all the rule changes that have happened in the last 6 months even. So if you're saving for 3-4 years, they might even change the down payment. So it's like, oh well, now you actually need 20%. That like they might actually, or there might be things that change over that savings period that you might not even be able to buy then after you've saved all that money.
Or qualifying.
Which
changed it last November. So certainly having current debt isn't always a bad thing. And people that think, first-time home buyers that think I still have student debt, I can't buy a home while having student debt. That's not the case. Those are fixed payments. Those, are, we can factor that in and look at your overall picture, and happy to talk to you even while you're starting to save of, listen, this is where your current situation is. This is what your debt scenario might look like, but your fixed payments on that OSAP debt is actually minimal, so it's not really hurting your ratios too much. And be able to let you know ahead of time of, okay, this is what your buying power would be now. Sure, if you waited the 5 years till you paid off that OSAP, this is, sure, you could afford this much more, but at the same time, again, the home prices are going to be that much.
And you can still
more.
get into that final home in 3-4 years. So just get into the starter home, build your equity, and then in 4 years you're going to have saved that money through the equity in your house, right? So one thing I should mention too for anyone that is watching, in my post I listed our mobile app. So if you go to our Facebook page or go to our website, there's actually a place where you can download our app. It's free, it's a mobile app, but it actually will explain to you the exact closing costs. It'll talk about the land transfer tax. It'll actually automatically calculate all that stuff in for you if you're a first-time home buyer. It's actually a really powerful tool, and it also tells you if you want to do kind of like a soft pre-approval, you can do it right on there, and it notifies us right away, so we can actually help you out with that.
So download our app, like our Facebook page, Referral Mortgages. What else? Go to our website, talk to us. We're here.
Talk to us early.
471 Elgin Street.
Serena, come in here. My daughter just showed up, so. So if you guys have any questions, obviously you can reach out to me, Matt, or Dave anytime. Swing by the office. We're right across from the police station. There's parking out front, so if you guys have questions, send them our way. We're more than happy to help. And the market's heating up, so we're looking forward to it. You guys have any closing remarks?
Share the post, share our page. We need your support. We're your local business, so, support local business, right?
Come down and play some foosball.
Yeah,
Let's play some
foosball
foos.
too.
All right, peace.
Have a great weekend, guys. And enjoy March break if you're spending with the kids.